Hey traders, this is MacDaddyTrader. Today I'm going to talk about version 2 of the MacDaddy mean reversion trading strategy. So in version 1, if you hadn't seen last week's video, go ahead and stop here and watch that one to get better context for how we evolved from the previous iteration to this iteration. Also, don't forget to like, comment, subscribe, and hit that notification bell so that way you can be one of the first people to get notified of any new videos that I create. So let's get started. First, we are on the 18-3 Ninzarenko chart. And as you can see here, that is the only chart I have up. Taking all my entries and looking at the bigger time frame all on this one chart. And I'm going to show you how I can do that. First, we have markers plus, which allows me to color these reversal bars and set them as entry points once I arm the semi-auto mode. I can arm long or short, and basically as this is going up, I can tell it, oh, let's go ahead and take the next short. And we tested this exact entry last week, and it has some merit. But what we're trying to do with version 2 is enhance the entries. I went ahead and took all three time frames, the 18-3 Ninzarenko, the 36-6 Ninzarenko, and the 54-9 Ninzarenko time periods, and I basically, as accurate as I could do, because there was a lot of disparity between the MACDs on one time frame versus the others, and as you can see here, it shows up. It shows up pretty great. And also created these bands. Now, the red and the green are the 54.9, 2.7 ATR distance from the mean. The orange lines, which you'll see here, let me see if I can pull up an orange and orange. Yep, right here. So these orange lines, that you see right here, these are the 36.6 channels. And then right here is the 18-3 channels. So you can see your low time frame, your medium time frame, and your high time frame all on one chart. Not only that, but you can see when we're overextended, not just on the channels themselves in relation to each other, but also in relation to the MACD when we hit right here. Now, we know that we have some merit on these entries, potentially for small profits, but we're trying to refine entries on this second iteration. So what I've implemented here is a method by which we can identify when we have a higher probability of a continuation. Now, that's a continuation to the mean, that's a continuation past the mean, that's just an overall continuation in the direction that we're wanting to go, right? So there's multiple ways we can do this. They're all pretty common and simple. It's just you got to pick the one that you like and that works best for you with your personality and strategy and risk profile. So let's go ahead and talk about that real quick. So right here we have an this is the 54.9 high time frame channel. So we're hitting this and we're going, right? And we see a potential reversal here. This time around with version 2, I want you to not take the first reversal candle. I want you to try and see if you can identify if we get a double top or a double bottom, and if so, take the reversal on that. And if you don't have that, wait for something like right here where we have a pullback. So take the pullback that's going with your reversal. You can take the pullback, or you can wait till you get a wick that cuts through your lines, and you can enter here. Now, my goal is always a 2-to-1. Well, I shouldn't say always. For the purposes of my back tests, it's 2-to-1, and that lets me know, hey, on either side of that, if I want to go, for the big fish or for the small fish, I have a decent frame of reference for how I can do that. But basically, what I'm looking for here is either 2 hits on this line and then a reversal candle, or I'm looking for a pullback above the line. I set my stop just behind the channel, and then I try to go for 2 to 1. So let's see how that looks. All right, let's go drawing tools. Let's go short. Let's give us some realistic expectations here of entry levels. All right, let's go for a few ticks out, and let's put this. All right, 2.0. So right about there is where we hit our twofer. All right. So that's just one way to do it. There are multiple ways. You can, if you hit the support line that was made here, you can try hitting that reversal. This is kind of like playing in the middle here. So I don't necessarily recommend that, because that's not what we're trying to accomplish here. We're trying to accomplish the big reversals that come off of a confluence of 3 time frames. Okay, so that's what we're looking for. But if we're wanting to play off of levels here, we can do that too. Okay, let's get a realistic slippage, and let's see, 2 right there. It's kind of close, but I think we did it. Yep. Let me pull this up. That's so close. You might not have gotten that. Without slippage, definitely. But with slippage, it's iffy. So that's another thing you need to take into consideration, is how much slippage are you allowing. Okay, here's another drop. Take your pullback. Set your stop below this line. Get a little bit of a slop right here. But let's see how that goes. Let's go long. Let's say we hit there. And let's say right there. Yeah, well, I don't know if we're going to make this, guys. There we go. We are going far today. Huh. Oh man. Oh man. What are we doing? Can we do it? I think we can. Oh, we did it. It took a few minutes, but we did it. Bam. Check that out. Check that out, ladies and gentlemen. So, there is merit here to this. If you took this at the reversal off the pullback, you have opportunities there. But you're going to have to weather the storm, because this was going sideways for quite a bit. So just be aware and practice good risk management and positioning and position size. Okay, right here, I'm going to show you how we're not going to take, obviously, new revision, new us. So we're not going to take this entry right here. We're going to wait for the pullback, and we have a continuation down. So we're not going to take this either. And we go up, and we have a continuation down. We're not going to take this either. We're going to wait for what? We're going to wait for the pullback that does not cross our zone. So we're going to enter here, okay? Going to enter here, get our drawing tool, and I'm just doing this for your own benefit, to see how the risk-reward ratio plays out. And if you are curious, at this moment in time, to get to the top of the 36.6 channel, it's about a 2.5 risk to reward at this setup. You could shore up your setup. You could say, hey, I believe that because this is a pullback that is higher than the initial start of this trend, that this trend will break if it goes below this wick. So I'm not going to go any lower or looser than this wick with maybe a couple ticks. Maybe give it some area, right? And so from here to there, that's a three and a half. But we're not doing that right now. All we want is that nice 2 for now. What do we get? Boom. Look at that. When did we get our 2? We got our 2 somewhere. Let me get this lined up. Right there. That's where we got our 2. And it did not take long to get there either. And that's all we got for today, folks. Be sure to like, comment, subscribe, and hit that notification bell so you can be one of the first to watch the next video. If you want to try version 1 until I get version 2 released, go ahead and shoot me an email at MacDaddyTraderHelp@gmail.com, and I will get you the Discord link so that way you can have access to all the indicators we're using here and all of the templates that we're using. And I'll let you know when I'm dropping version 2. I'm still testing out some things, but so far so good. I really like this setup. Thanks everyone for the support. The Discord's growing by the day. So thanks for watching, and I'll catch you next time.